How do you know if you're getting a good deal or a bad deal when it comes to business financing? Most importantly, how do you avoid predatory lenders and predatory type of loan programs? Well, during this training, it's exactly what we're going to talk about. We're going to talk about all the signs you need to look for to know you're getting a bad deal on funding. We're going to teach you what's in the small print that most lenders won't tell you about and help you determine the type of lenders you want to choose based on the type of languaging they're using and how they actually present their terms. We're going to show you the signs to recognize that you're getting a bad deal and what you need to do to make sure you're getting a good deal. We're going to teach you everything you need to know to avoid a predatory loan by a predatory lender and be able to get the kind of financing you need to start and grow your business and do it the right way and get the financing with the best terms. So we've got a lot to cover. Let's jump in. So creditors versus predators. Well, you can tell the difference between legit creditors and predatory lenders pretty simply. And I think Investopedia sums it up. Predatory lending benefits the lender and ignores or hinders the borrower's ability to repay a debt. These lending tactics often try to take advantage of a borrower's lack of understanding concerning loans, terms, or financial literacy. Just like predatory lenders in nature, predatory lenders have taken advantage of the weak, and we'll talk about that today. They typically look at the underserved borrowers, and those are the ones that they typically target. So predatory lending when it comes to business loans is becoming an increasingly prevalent problem. We saw a lot of that even with PPP loans and a lot of lenders trying to charge crazy amounts of extra fees and money just to be able to get things like that done. So it's very timely with what we're seeing today. So look, if a business falls prey to a predatory lender, it could fail quickly. A large number of small businesses go bankrupt within 5 years, and predatory lending practices are a very large part to blame for those failures. Small business owners often get tangled in interest rates and fees they can't pay. A vicious cycle can ensure because what happens is they get into these loans they can't pay. Then they happen to go get another loan and another loan and another loan to keep afloat. And it just keeps getting worse and worse and worse. And oftentimes that pushes a business to basically the end, to the brink, to bankruptcy. So the key is to know the signs of these and recognize them before you apply. Well, this is more important now than ever before because after 2008, when Dodd-Frank came out, that law, and made it harder for conventional banks to lend money to small business owners, well, all these fintech sources popped up. And now there are hundreds of thousands of funding options available for you online. And the problem is that if you don't recognize the difference between a predatory lender or a predatory lending program and one that's not, well, then you can get caught in one of those vicious cycles that's really bad for the organization. And Rohan, thanks for tuning in from LinkedIn. I appreciate it. So these are the how to recognize a predatory lender. Well, these are the basics of recognizing lender hold true whether you're seeking a business loan or a personal loan. It really works on both sides. So to recognize a predatory lender, you have to know the signs, and knowing them really makes all the difference because it's how you can recognize that you're being presented an offer that has bad terms versus one that actually has good terms. So we'll talk about an overview of some of these things, and we're going to break each one of them down to give you the details of what to look for. So for example, they may focus on monthly payment amount rather than total loan amount. So a lot of people are unfamiliar with an APR. And an APR really calculates all of the fees you're going to pay into one percentage, which is way different than an interest rate. So a lot of predatory lenders are focusing on the monthly payment you'll pay instead of the total loan amount, because the total loan amount has a lot of fees and extra stuff that is brought into it. Okay, they may insist on large payments at the end of the loan, oftentimes called a balloon loan. That's a common sign of a predatory lender as well. Okay, in business lending, this can be helpful in some cases, right? Maybe you're waiting on money to come in and you just need a low payment to carry you a certain period of time, and then you're okay paying a balloon payment in the end. So that's important to note here. Just because a lender does one or some of these things doesn't necessarily mean they're a predatory lender. But these are signs you should look for that will clue you in that you may have a problem to look further. And here's what I mean by that. Look, there are all kinds of balloon payments. We call these bridge loans. Bridge loans are designed to give you a low payment over a period of time till you can find other kind of financing that may work for you. And you pay a hefty interest rate for that actual bridge loan. But again, there are other type of lenders out there that are predatory, which are just showing you small payments because you want them. But the reality is that you're going to be faced with an unexpected balloon payment in the end. Okay, so some things to keep in mind. However, you do need to know that your payments are only paying interest and not reducing principal on some of those type of loans. You have to recognize if that's really the type of loan that you want and need in that moment. Again, If you're just getting a bridge loan because you understand that you need something to bridge the gap, that's okay. But a lot of the problem comes in when these things aren't openly disclosed. You don't know what you're getting into, and you get yourself caught into something you really don't want to have. So punishment for early payment or prepayment penalties is one way you can recognize a lender that might not have your best interest at heart. So seeking the weak is another, right? Minorities, immigrants who tend to be underserved, those are oftentimes targeted in marketing campaigns from these type of predatory lending. So some things to keep in mind. Okay, it's meant to make them think they're getting a great deal when they're quoting low payments and low low payments or low other things like interest rates or fees, but really the loan amount's high because of other fees they're adding in, or again, they're adding a balloon payment to the end. Okay, or offer to fix a bad deal later. That's another sign of a predatory lender where you raise concerns and they say, don't worry about it. You know, we'll deal with that later. That could happen at a later point in time. And I actually had that happen with a short sale lender I was talking to about a property. And I had all my attorneys on the phone, their attorneys on the phone, the lender on the phone, everybody on the phone. And I told the lender, I said, this is absurd. You know, you're going to have me pay you for 10 years on that property, and the property's still worth considerably less money than what would even be owed. And the actual lady came in from the lender and she said, well, that's, you know, value doesn't climb by that much in that period of time. And that's when, you know, we all kind of chuckled and laughed, and my attorneys jumped in and didn't even have to correct her by saying, you can't say those kind of things and try to give assurances that the problem will resolve itself down the road. Okay, but that's a perfect example of somebody that says, hey, look, the payments are low, everything is good. Well, yeah, but based on what you're doing, you're tacking a massive balloon onto the end. So in 10 years, I'm going to owe way more than the property was even worth. So that's the kind of thing you have to be able to look out for. Otherwise, she was selling the merits of the deal being the low payments. And I was saying, yeah, but you're tacking a massive balloon on in the end. And that gives me an inability to refinance out of it. I can never get out of this loan because nobody will finance that much above what the property was worth. So again, that's why you have to know these things up front, because even though that was not an early payment or that's not seeking the weak, that is one of those circumstances where there's a large balloon payment. If you don't know to ask the right questions, they're being sold, the parameters of it are being sold on the low monthly payment instead of the balloon. Okay, loan flipping is another thing you have to look out for. It's going to be sold to another type of investor. Monthly payment doesn't include all borrowers' cost. It's tacked in somewhere else. So these are some other signs that you have to look at. So let's look at payment over loan amount. Well, lenders should always be willing to disclose the total loan amount and terms, including APR. You should not have to beg for this and search for it. Lenders that focus only on the payment could be sketchy. So there are many things you could do to make a monthly payment lower, and you have to be careful. If you're being given an offer and the offer is focused mainly on the monthly payment, again, none of these things alone indicate you're dealing with a predatory lender, but there's signs to look for that you need to dive in deeper. If a lender's just touting and showing you a low monthly payment, you have to be skeptical. They should be showing you something that shows you the monthly payment, the loan amount, the total fees being charged, the APR, which calculates in the interest and the fees into one percentage. If they're only showing you the monthly payment, that's sketchy. You have to be skeptical there. So for example, extended loan period is a way that you can lower a monthly payment. Adding a balloon, a large payment to the end, is another way you can lower a monthly payment. Or you can make adjustments to the loan terms. And what I mean by that is they can amortize something, and this is how balloons work. They amortize something over a longer period of time, but the reality is they want their money in a shorter period of time. And that's what balloon payments are. They amortize, which means your payments are calculated over a longer period of time, but they really want to be paid in a much shorter period of time. So those are some signs you can look for. All these things can make your monthly payments look lower, but the reality is that's really a bad loan when you start looking at the fees and everything else that's being calculated in. If they're insisting on a balloon, well, that could be a problem as well. Again, they're common practice amongst predatory lenders. And in some cases, they're not there. They work well for you. Even if, you're not dealing with a predatory lender, there might be times we talked about like bridge loans where it makes sense, but they're very common with predatory lenders. They're not always bad, but again, predatory lenders often use them for unsuspecting borrowers to give you a low monthly payment, knowing that you're going to owe all of this money in the end. Now, most borrowers don't even realize that they're basically only covering the interest with their payments, not even paying down any principal. And the result is that the large balloon at the end is actually the entire principal of the loan. So I actually had this happen with a company that had something similar where they came in and what they were supposed to end up paying in total for the value of what they were getting was $1 million. Well, first they were charged an exorbitant amount above what they were supposed to be charged. So it worked out to like $3 million they were paying for this asset they were supposed to be buying. Then the payments were so high because the amount they were paying was so much above and beyond what it was supposed to be that the actual funding source then gave interest-only payments so the payments could be affordable. The problem is if you look at the math of how it all worked out, and this is a real case scenario of somebody sketchy doing some sketchy things, then the reality is the asset that was being bought for $1 million. And in the end, when it was all said and done and everything would have been paid that was supposed to be paid, it would have been upwards of $10 million would have been paid. So a 10x premium charge because of the way the deal was actually structured. That's the real case scenario you get into, and you get into all these kind of problems and balloons and these types of things are attached when you're dealing with predatory lenders. So do me a favor, if you're getting value here, hit the like button, hit the love button. Okay, I can see that in real time. It's the only thing I ever asked for. Lets me know I'm on the right track and lets the social channels know that we've got good content and other people coming in. Good morning, Robert. Thanks for coming in. Michael from LinkedIn says, address the financial department of auto dealers and the cost of loan for a car. Well, that's a perfect example of that as well on the consumer side, and we'll talk about that. Elaine, women are too. Yes, very much targeted, and that is that minority group. And you are a minority when it comes to ownership of business. Veterans, women, disabled veterans as well, are all in minorities when it comes to businesses because women have a much smaller percentage of ownership, or much smaller percent of businesses that are owned by women, and therefore in that minority group and oftentimes targeted. It's a good point. And Antoine says, I'm about to sign up with you, Ty, for white label. Awesome. Been talking to my wife about it. That's great. And tell her I said hello. And Patrick, wow, thanks for coming in. So Michael talks about this way. He says, address the financial department of auto dealers and the cost of the loan for a car. So it's exactly the same thing. When we look at cars, for example, you could pay upwards of 20, 30% plus interest for a car that somebody that's lower risk is able to get for significantly less money. I mean, I've seen that you can get a payment 70% cheaper if you know what you're looking for and getting the right kind of deal than if you're not. And again, a lot of that is addressed with APRs because APRs show you the total fees that are calculated in to the actual loan amount, including fees, including interest, not just the interest and not just the monthly payments. So some things to keep an eye out on as well. So most borrowers are not prepared for this. When they have to refinance and start the whole side process over, then not only that, but they can't. They owe more than it's worth. They're upside down in a lot of cases. Okay. And I gave you a perfect example of that where a lender was trying to get me to bite on small monthly payments with a massive balloon, but it would have made me basically paying nothing down and still owing considerably more than it was worth and never being able to refinance it. And that's exactly what the interesting conversation was. As I said, look, I said, this is ridiculous. There's no way this works long-term. And she said specifically, this isn't designed to be a long-term fix. I said, but here's the problem. The way you're structuring the deal with a large balloon in the end, you're not giving me any other options. Nobody can ever refinance this deal. So you can't have your cake and eat it too. You can't not offer me a long-term solution, but then offer me a loan that's so bad that I can never go to another lender to get a long-term solution. That's predatory. And that's exactly what you have to look out for. So unnecessary extras. Another common practice of predatory lenders is adding extras onto the loan. They're usually things the borrower does not need, and often the borrower will not even know that they're there. The most common extras seem to be insurance products, and this tends to be products that do not offer any benefit. Now look, this is exactly one of the things that Michael was actually talking about here. Okay, and when we look at auto dealers, they are notorious for this. When you go in, what happens is they quote you a monthly payment. They're selling you on a monthly payment. Then when you go into the box, which is the finance department, that monthly payment you've been quoted includes all this extra crap you don't need. Maybe you do, maybe you don't. I'm not one to give you that opinion, right? But you have to look at this because there's all kinds of insurance products and wheel protection products, and there's all kinds of gap coverage. And I'm not saying that these things aren't needed or aren't helpful. What I am saying, and I'll tell you from somebody that spent a lot of time in the finance industry in the auto world as well as mortgage world, that you could buy that stuff for a fraction of the price outside of the dealership. Just some things to consider. Oftentimes, they're marked up hundreds of percentage points from the actual dealer. So this is a perfect example. When you buy a car, they quote you a $500 a month payment. You go into finance and you see that that payment includes gapping coverage, includes insurance, includes wheel protection, includes all of the stuff you may or may not need, buying it for a super premium for the dealer. So it's just one example of a lot of these extras being rolled in that you don't need, insurance amongst many other things. So this is why you have to look at those fine print. So the role New York plays in predatory lending world, okay, might actually serve a pretty unique role, and you might not know why or why this matters to you, but I'm about to tell you. It all comes down to what's called a confession of judgment. So if a borrower signs a confession of judgment, they're basically agreeing to lose in a court battle if there's a dispute about repayment. Many cash advance companies, which make up a large fraction of these predatory lenders, okay, have their borrowers sign one of these. And then what happens is New York state law is friendly to this type of contract. So regardless of whether the loan takes place, it may include a New York confession of judgment. Okay, this could also mean that you're agreeing to venue any lawsuits in New York State, which could greatly increase expense if you do not live there. Okay, so think about this, for example. New York State, okay, has something that allows this confession of judgment. Again, the confession of judgment, basically, you are agreeing to lose in a court battle if there's any kind of dispute. You're basically agreeing that you're going to lose. Okay. And so then what happens is they have you sign this, which is legal in New York. Okay. And I don't know why it's not legal in a lot of other places. And then they have in the same agreement the ability for them to choose the venue. They may even tell you the venue will be New York. Then they go fight the lawsuit in New York because New York has this confession of judgment. Then you have to go from like Florida, where I live, to New York every single time there's a court hearing, adding tens of thousands of dollars in expense. So it makes it too expensive for you to even fight back. Now, there's a couple points in there. First, the confession of judgment part that you got to look out for, because again, that alone can make you guilty if they go to try it in New York. But you also got to watch out for making sure that they're not choosing the venue and it's not in a state that's impractical for you, because they could be doing it in a state that's completely far away from where you are, and that could make it harder for you to fight it there. So some things to think about beyond the confession of judgment is them choosing the venue. The other thing that I really look for when I sign agreements and contracts is what's called a mediation clause. And the mediation clause basically says if there is a dispute or an agreement, that it will go into a mediator before it goes into the court. And so that makes a lot of sense. It gives you a layer of protection that instead of them just suing you and taking you to court in New York when you live in Florida, they have to go into mediation. And that gives you a chance to a mediator to settle things instead of having to go through a lawsuit or go to a lawsuit first, or to go and try to fight a court battle in a state that you don't even reside. Okay. So punishment for early payment, another sign. Prepayment penalties could define as being a red flag. Early payment is good, even though the lender may lose some interest. By itself, well, that should be the reason you do not take a loan. Okay, it's not the reason you don't want to take it. Some kind of financing is just common with prepayment penalties. But I can tell you that a lot of times there's options. So, when we look at predatory lending, we look at payday advance loans. We look at merchant cash advances and revenue lending. I'm not saying that's predatory lending. It's very helpful to a lot of borrowers that are high risk, but some of it is predatory. And when you look at merchant cash advances and revenue lending, then what you find is that there are always lenders that offer both. Some lenders have prepayment penalties. Some lenders don't. So when borrowers come and say specifically, hey, I want something with no prepayment penalty, well, then we know the lenders that offer those versus the lenders that have them. So this is something you need to pay attention to, because if you're looking for a certain kind of funding, in this example, merchant cash advances or MCA loans, well, you can choose. You can go to your lending source, your broker, whoever it may be, Credit Suisse, whoever you're working with to try to get you that kind of funding and say, look, I don't want a prepayment penalty. So give me a funding source that doesn't have a prepayment penalty. And oftentimes with many types of programs, they can go to a lender that doesn't have a prepayment penalty versus lenders that do. And again, I'm not saying that every lender with a prepayment penalty is a predatory lender. I'm not saying that at all. Lenders have to make their money back. They go through all this process and cost of underwriting something. They need to get paid back, right? That's how they make their money. But I am saying it's a red flag to look out for. And oftentimes there are just as many funding options with lenders that don't offer that funding product as ones that do, that have a prepayment penalty on there. So lenders that are obviously seeking borrowers that are weak should be avoided. For example, those that seem to be targeting minorities, immigrants, those with no credit or bad credit, borrowers in the low income category, women-owned businesses, veteran-owned businesses, disabled-owned business or disabled veteran-owned businesses all fall in these minority categories. Now, I'm not saying you are weak, okay, by means of any other way than saying that minorities usually have a harder time of accessing capital and a harder time of building their business up than a lot of minority-owned businesses. Now, you could judge me on that, but I've actually done presentations before where I've rolled out the statistics, and it's pretty telling. If you look at African-American-owned businesses versus white-owned businesses, there's a massive discrepancy between the battles that the African-American-owned businesses have to go through to access capital. The white-owned business, it's just the way it is. It's statistically, factually true. So again, when I'm not saying weak as in you are weak, I'm saying weak as in it's harder for these people to access the capital they need anyway. They're in a weaker, harder category already fighting that battle to begin with. So they're like nefarious in nature. In fact, those that fall into those categories are more likely than others to fall prey, according to a 2015 Center for Responsible Lending report. Okay, and be wary of language such as bad credit doesn't matter. Also watch for lenders that initiate contact unprovoked or that try to rush you to a decision. So some other things you want to keep an eye out for. Some predatory lenders will try to earn trust by admitting they're offering a bad deal, but they offer to fix it in the future, right? They claim they will allow for a refinance that will be a better option, but don't fall for it. A bad deal is a bad deal. Just walk away. Again, gave you the example of me in my own life where they came in, tried to add a massive balloon and said, hey, it's got low payments. It's good. Well, it amortized over 30 years with a massive balloon payment that put me way upside down. Okay. And in that case, they said, don't worry about it. What we're going to do is at that point in time, we'll refinance. We'll put you into a better loan. And of which I said, why not do that now? Like, why wait till then? Why not do it now? Or would you be willing to put in writing that you're going to give me a significantly better loan when the balloon comes due? Which they would not do, right? And what was interesting about this is I had attorneys on the call with me as they were trying to do this. And then they would make some completely fabricated statement. And my attorney would come in and say, you can't prove that. That's not factually true. You can't prove that. That's not factually true. Like, I didn't have to say anything. Every time I would just goat them into saying like these crazy things that were completely, that proved that it was a predatory loan. And then my attorney's like, you can't guarantee that. You can't tell him the value is going to go up by that much. You can't tell him that he's going to be able to just refinance. And so it's interesting because even with attorneys on the call, they were still trying to get away with this. So loan flipping is not the same as house flipping. Flipping a house can be very profitable. Loan flipping is actually a classic predatory lending tactic. When a predatory lender sees that you're struggling, they offer a refinance. However, you end up paying points and fees again. Before it's over, you end up owing even more, sometimes even more than your collateral is even worth. So what happens is it's like a two-part deal. They're actually doing the first part of the deal and you pay them fees. Then they're flipping it to the actual lenders that's going to finance the deal. And then you've got their fees tacked on as well. So it makes it way, way worse because you're paying fees with two different kind of institutions. And Michael says, amen, brother. Appreciate that. And Michael says, also cover if you haven't, agreeing to predatory lender affects your future ability to borrow, especially for businesses. Well, it definitely does. And what Michael says here, and I'm not sure specifically what he's referencing, but this could definitely be in the case of UCC filings. What happens in business lending is that a lender will actually put something on your credit report called a UCC filing that warns other lenders that you have that loan in place. And the minute they do that, it becomes significantly harder for you to get any other kind of loan that's out there. So we actually, the first revenue lending loan we ever had, they added a UCC filing to our business credit report. The lender then went out of business and they never removed it. Then we went to get an SBA loan, and the SBA loan made us prove, or one of the requirements for underwriting was to have the UCC filing removed. Well, how are we supposed to do that? The lender was out of business. It delayed our closing by months because that UCC filing that other lenders saw made it harder to get a loan because that lender actually added it. And by the way, Michael brings up a great point. You can even actually ask if the lender files a UCC filing on your business credit report or not. And you could choose another lender that offers the same kind of program that doesn't do a UCC filing. Much like prepayment penalties, UCC filings and prepayment penalties is the choice of the lender. There's lenders that offer all the same kind of funding programs without a prepayment penalty. And there's also lenders that offer all the same kind of funding programs without a UCC filing on your business credit report. So it won't lower your score, but it tells other lenders that you have an outstanding loan, and that can make it harder, even in the example that I just told you about, to be able to get other kind of financing. So recognize the signs of predatory lenders essentially by protecting yourself, but they will not always be obvious. Ask these questions to the lenders or just to yourself to help you see what's really going on. Is the offer too good to be true? One of the best signs I ever get that you're dealing with something that's a scam or predatory lending. So, for example, a lot of people sell shelf corporations, right? And so many people ask me about shelf corporations. And here's the sales pitch. You buy a shelf corporation that's got an already established business, or you buy trade lines, right? You buy all these high limit trade lines to fool lenders into thinking you have all this credit you don't have. And then a lot of the sources will tell you that you're going to get a $250,000 credit line if you just get the shelf corp or you buy the trade lines. And guess what happens? You spend thousands to buy the shelf corp, thousands to buy the trade lines, and they never end up getting you those credit lines they say that they could get you. Okay, so does it sound too good to be true? Somebody's going to add fake trade lines to your business credit report to fool lenders into thinking you have money you don't have, and then give you a $250,000 credit line when you clearly don't qualify. That's clearly a sign that things are too good to be true. Okay, another thing are CPN numbers, right? This idea that you have bad credit, don't worry about it. You can use a CPN number and create a whole secondary credit profile and just start your credit profile over again. Does that sound good? Too good to be true? Yeah, it typically is. So things like that are too good to be true are almost always problematic. They are too good to be true. Okay, what does a product truly cost? You should know what the total loan amount is. You should be told what the APR is. If they're not disclosing that and you have to beg or ask for that, then that alone could be a red flag that you're dealing with a predatory lender. Will the lender check my ability to repay? So again, will they add a prepayment penalty on there? Are they even looking to see if you have the ability to repay? Are they asking for income documents? Are they doing any kind of verification? Look, I say this again and again and again when I teach about getting capital. The one thing that all lenders and credit issuers care about, there's only one, really. There's only one thing that they care about. They ask you for all these documents, all these questions. There's only one thing they're really looking for. Do you have the ability to repay that loan? That's all they care about. Do you really have the ability to repay that money you're borrowing? If they're not digging in and asking for questions that give them some kind of indication whether you have the ability to repay, that alone is a red flag because it's the number one thing that all legitimate lenders are really looking for. Does the loan help me build credit? Well, again, that's not necessarily a negative if it doesn't, but lenders that actually are, really out for your best interest, a lot of cases report those accounts to the business credit reporting agencies and help you build business credit at the same time. So I always ask that question. I always do. Whenever I get a loan, I say, look, where do you report this? Do you report it on my consumer credit reports, my business credit reports? Nowhere. You should know that. I always ask that. I also ask what credit bureau they pull. I don't know. I'd like to know. Because if I'm getting a loan and they say they pulled TransUnion, or I'm getting a loan and they say they pulled TransUnion, Equifax, and Experian on the consumer side, I might just go with the TransUnion dude because I only have one inquiry versus an inquiry on all credit bureaus here. So I always ask, what bureau are you pulling to make the decision? Where do you report the loan? Where do you report the credit card? It's always a question I ask before I get any kind of loan or credit line or credit card. Okay. And Nancy, hello. Thanks for coming in on YouTube. So can you find any information about the lender online? Check their online reviews, the Better Business Bureau, any other online sites like So Tell Us. Look, I don't know about you, but I can, hand raised, have gotten a bad deal from a shady company to not look at reviews and then look after the fact and go, should have done that before. The reviews clearly outline that all these other people have the same problem I'm having now. And if I just would have looked, and it's one of these moments, I cannot believe I did not check BBB. I cannot believe I did not check reviews. You've probably been there before. Okay, so when you do that, you just got to check online, do the research, check the reviews, check their BBB, check and see what other kind of information is available for them online. Have others complained about the lender? The answer to these questions will not always tell you what you need to know, but it definitely certainly tells you red flags. Another check I use is their social media accounts. I always look at their social media. It's on their website usually. If there's no social media accounts, it automatically throws a red flag to me. If I click on the social media account and they're making themselves out to be a really big company, but they have a very small following, that to me is a red flag. And if they have social media accounts that they haven't posted or done anything with for years, that to me is a red flag. Again, not saying all these are, none of what I'm talking about today are clear-cut signs you're dealing with a predatory lender, but all of them are red flags. You get enough of those red flags thrown up, you know something's not right. Okay, so predatory lending and business loans versus personal loans. Well, an alarming number of small businesses are falling prey to predatory lending, and you can protect yourself with just one extra step or two of asking some of these questions, of knowing some of these things. For example, if you work with an SBA partner lender, you're likely not going to have to worry about predatory lending. SBA has already done that assessment for you in that case. Okay, so you can also contact your local chamber of commerce. Find out if they know anything about the lender you're considering if you can't find anything online. But by the way, if I can't find anything about them online, I am not using them. I'm not going to do it. Okay, look for help. So working with a company that specializes in helping small businesses find funds, that can help you as well if you're dealing with a reputable company or broker. Okay, so for example, we work with over 1,000 different kinds of funding sources, and we go to do a lot of due diligence to make sure they check out before we even mention those kind of programs or lending sources to you. I'm not trying to tout Credit Suite. What I am trying to say is that there are people like us out there that specialize in helping business owners get capital that actually do a lot of the vetting. And you can look clearly online and see hundreds and hundreds and hundreds of our reviews. And you can look at BBB and see we don't have complaints. And you can clearly see that we're reputable and therefore know that the due diligence we're doing on these sources, we're doing it for you so you don't necessarily have to do as much of it. There's a lot of brokers out there that can help you. But again, there's a lot of brokers out in the loan space that can be shady as well. So you have to do due diligence on the company that's helping you place the loan if you're going that route. And we also have a great credit line hybrid program that can work really well, that can help you get funding, $150,000 in startup funding, 0% rates, no doc. It's a really cool option that can work for you as well. Just an example of the type of funding that's out there that you might not know about without going through some of the predatory sources. And by the way, on this credit line hybrid program, it's actually a perfect example. There's several funders in this space that are not necessarily credible. Okay, many, as a matter of fact, some of the owners of companies that run and that offer these kind of programs have already been jailed for fraud. So what happens with credit line hybrid is oftentimes the funding source will increase your income on the application. They submit the application on your behalf. They increase the income to make it look like you have more money than you really make just to get higher loan amounts. Okay, and they get caught and they get in jail and all kinds of trouble for this, and they get investigated for fraud. There's all kinds of problems. Then there's other funders in this space that are awesome, that are amazing, that are the most ethical people I've ever worked with in my entire life. There are funders in this space that will call the lender and say they're you and try to negotiate to get certain things done when they're really not you and they don't have the ability to do so. And then there are people that do it exactly by the book and get faster approvals and more money. So that's what's nice about working with somebody that works with multiple funders. They can find the ones without prepayment penalties. They can find the ones that don't file UCC filings. They can find the ones that are actually legitimate, that are ethical, versus the sources in that space that aren't. Because in the consumer and commercial funding space, I don't care if you're getting a personal loan or business loan, there are shady people that offer every kind of product that's out there. There's a lot of good products, and there's shady lenders, and there's ones that are good. And if you don't know how to differentiate between them, then work with a credible company that does that due diligence for you. It saves you time. So the Responsible Business Lending Coalition, this is a network of nonprofit and for-profit lenders, investors, and small business advocates. They have a common commitment to innovation in the small business lending industry. They also have serious concerns about the increase of irresponsible small business lending that's happening. In 2015, they drafted the Small Business Owners Bill of Rights. And when searching for a small business lender, look for those that have signed the Small Business Owners Bill of Rights. That's good. And this is also what I found the reputable organization to look at to see if the actual program and the lender you're dealing with might have a bad background. So there are many members of this coalition. Here are just a few: Funding Circle, Lending Club, Street Shares. There's a lot of different funding sources out there, but the coalition even has like lists of reputable sources, so you can actually tap into ones that are responsible, that don't have these kind of unethical practices. Small Business Lending Fairness Act. At the end of 2019, this bill was introduced to the Senate. Has not yet passed, but it promises great help to the problem of predatory lending when it comes to those targeted in small businesses. Among other things, it bans the use of confessions of judgment in small business lending contracts, which should happen. Look, here's the problem. Here's the good news and the bad news. As entrepreneurs, we don't whine much. We solve problems. We don't complain about them. That's why we got to be business owners, because we like the challenge of finding problems and overcoming and solving those problems. Consumers, there's a lot of whiners on that side. So whenever things go wrong on the consumer front, bureaucrats get involved and laws are passed. And there's all these consumer laws that are out there to protect consumers and all kinds of lending practices. But because we don't complain a lot as entrepreneurs, this stuff doesn't happen a lot. There's not a lot of bills and acts and laws that protect us because we don't ask for protection often. We get, excuse my language, well, we get duped, okay? And then we're like, oh, man, all right, I learned from my mistake. And then we move on. We don't go complain to the government that we've got problems. And then the government passes laws. We just don't do that as entrepreneurs. So as a result, there's a lot of consumer protection out there and not a lot of protection for small business owners. And that's why. It's just an unregulated space when it comes to business lending because there's not enough people that get burned and complain about it. We learn from our mistakes and move on. So this is pretty groundbreaking because there's just not a lot of laws out there that protect us in the lending space of small business owners. Other ways to protect yourself. Education is key. Try these sites to stay on top of things. The money and credit page on the Federal Trade Commission's website, here it is, consumer.ftc.gov/topics/money-credit. The Ask the CFPB page. That's the Consumer Financial Protection Bureau, created years ago for protection of businesses and consumers as well. The consumerfinance.gov/ask-CFPB. And the Attorney General's office in the specific state that you're looking at. Those are some other places that you can get even more information that you can then use to protect yourself as well. Okay, and Island Girl, greetings. Thanks for coming in, watching intently. I appreciate that. And Patrick says very true. Thanks for Patrick. So you need to know how to spot a predatory lender. There are many signs that they can use, as we talked about. There are laws in place. There are resources that can help you. You could work with a company that actually works with a lot of lenders and does that vetting for you. So we talked about signs to look for. We talked about things that can help you along the way. If we can ever help you, get in touch, creditsuite.com/get funding. I'll give you our phone number here in a minute as well. We work with over 1,000 different types of funding sources, every legitimate business funding program that we found. If you ever watch my webinars, I always say the same thing. I say, we work with every legitimate type of funding program that exists. And maybe you've noticed that and maybe you haven't. But I specifically use the word legitimate for a reason. People approach us all the time to offer credit lines, business credit cards, and loans to our tribe. And we vet every single one of those sources. And a lot of the cases, the lending source is not legitimate. They're just not, they're not honorable. They're not ethical. They don't have good customer service. They don't do what they say they're going to do. And you never hear about those programs. We never mention them because they never pass the sniff test. They never actually do what they say they're going to do. That's why I always use that word legitimate, because there's a lot of funding programs that are out there that are not legit, and we only work with the ones that actually are legit, that we vetted, that we know can actually work. And you never pay us a dime of money. Okay, lenders and credit issuers sometimes pay us a referral fee, sometimes they don't. So if we can help you along the way, we're another resource as well. You can get in touch with us, 877-600-2487. Email us, info@creditsuite.com, or get scheduled for a consult online, creditsuite.com/consult. On a consultation call, we get your business credit reports for free. They're $249 from the credit bureaus directly. We get them for you at no cost. We go through them with you. We give you tips and tactics to improve your business credit. We also do a fundability assessment to figure out what's messed up with your fundability and fix it so you have the best chance of getting the most money at the best terms. We also qualify you for funding. We tell you all the loans or credit lines you can qualify for right now, and that happens at no cost. Just give us a call, send us an email, or schedule online at creditsuite.com/consult. If you got value, hit the like button, the love button, please. I can see in real time if you do that. And what happens is when you hit like, love, or share, the social platforms see people are engaged and they show it to more people. And it helps me get the word out, which is important to me. I want to help entrepreneurs get the most money at the best terms and avoid these kind of predatory tactics. And I can only really do it with your help by sharing, by liking, by loving. So if you could do that, I appreciate it. And if you got value here, then like and subscribe. If you're on YouTube, click the bell beside subscribe. Click all as the option. You get notified whenever we go live. On the top right of our page, creditsuite.com, you can follow our social pages. Daily tips on places like Instagram, Twitter, Facebook. And then we also have live training Tuesday and Thursday at 11 o'clock on Wednesday, all Eastern time. Okay. And we have a podcast, the Business Credit Finance Show, 400,000 downloads on that. So it's very popular. And I interview all kinds of experts in their fields, from attorneys that people help you advertise and market. Michelle, one of my friends, was on yesterday. I interviewed her, and it's all about the GPS model to sell your business, like what you need to do to make your business worth more money if you want to exit and be able to successfully exit. 80% of business owners that want to sell never end up exiting because they don't do the right things. That's the kind of stuff that we talk about on the podcast. All of our links are accessible at the top right of our page, creditsuite.com. Jerson, thanks for tuning in. Happy, or Tab Investments, thanks for coming in as well. And Renita Flood, thanks for coming in. This is Over the Top, Ty. Truly appreciate all the wisdom. Thank you very much. Thanks for tuning in from YouTube. So thank you all. Have a great day. And I look forward to see you in our next training. We'll talk about more ways that you can get money safely to be able to start and grow your business. And don't forget, keep an eye out for our Funding 30 Challenge, which will take place in March, where we bring 20 lenders, over 30 funding options in one place. It's going to be a live, and right now it's free. We're not going to charge for this. I know it's crazy, but we're going to bring it together. We're going to have an actual funding challenge. And the whole challenge is for you to choose 3 of your favorite of the 30 funding options that will work for you. Keep an eye on that. And if you want to make sure you get an email and notified when the funding challenge, when we start promoting it and letting people into the challenge, then you can go to creditsuite.com/live. creditsuite.com/live. Grab our business credit building guide. That'll get you on our email list if you're not on our email list already. And then when we open the doors to start letting people in for the funding challenge, which will take place in March, you will be notified. And in February, next month, we are doing something off the wall crazy. Okay, I'm calling it the 3-hour training. I don't know where I'm going to pee in between. I don't know. I haven't figured that part out yet. But I'm going to go for about 3 hours, and we're going to dive into 50 different ways you can get money for your business. That's taking place next month. And again, if you want to be part, go to creditsuite.com/live, get on our list, and we will notify you of those upcoming events. Thanks for tuning in. I look forward to seeing you on our next training where we talk about more cool ways for you to get money to grow your business.